Hello there. Welcome to another episode of the Forex Podcast. In this episode, I want to share with you my technical analysis journey and how I use technical analysis to trade the Forex markets. I hope everyone is doing well. It's been a while since I did one of these Forex podcast episodes. I've been very busy with trading. I recently uploaded a brand new series to YouTube about trading a small account. The account's going well. Watch the live trading videos. I've had some good trades today. I went short Swiss franc yen based on the Swiss National Bank cutting interest rates. I opened the trade before the rate cut was announced. That positions company in profit around 1-to-1 risk reward. Euro NOK has fallen lower today, which is great news. My Euro NOK positions, all of this is covered in that brand new series, so please check it out. So let's talk about technical analysis, and the best place to start with technical analysis is really my story of how I came to discover technical analysis and how I've honed my technical analysis skills to become the trader I am today. So let's start right at the beginning. And in the beginning, I lost my job in accounting, so I was unemployed. I wanted to set up my own accounting business, which I eventually did and still own that practice today. But I was at home, I was unemployed, and I wanted to give trading a go. I always wanted to be a trader, I just didn't think it was possible. And by this point, we're talking about 15 years ago, by this point online trading had become a major thing. You know, there were brokers all over the place attracting retail traders or potential retail traders through online advertising, and Forex trading especially was starting to become quite popular. So I started to trade Forex using a CFD trading platform. The platform was rubbish compared to how you would analyze charts today on TradingView and other trading software. The platform I was using 15 years ago was pretty useless, and I knew nothing about fundamental analysis or technical analysis. So what I started to do was trade stocks CFDs, and I would simply look at prices, buy what I thought was cheap, and then try and sell for profit. And it actually did work for a little while. You know, even the worst strategies can work for a little while until the losses start coming in. And I had no money. So how do you trade and make money if you have no money? I borrowed money, which I really suggest you don't do. So I went to the bank, borrowed £3,000. I really discourage you doing something like this. And I had no money, so borrowing £3,000 was a huge loan for me at the time. And I started trading with that £3,000. My first day, I think I made £200, £300, £400. I can't remember now. But I was over the moon, because I'd never made that much money in a single day of my life. The next day was quiet, but at some point I made a huge loss, like a £2,000 loss. And I was devastated. Absolutely devastated. I was sweating and really knew I had messed up. That led me to a crossroads, and this crossroads was, okay, do I keep £1,500, what was left of the kitty, and give up and invest this in my new business and say, try trading, let's move on to something else? Or do I commit to this and try and learn from this mistake and become a trader? And I chose the latter, and I decided at that point that I was going to take trading more seriously, and that led me to technical analysis, which eventually led me to fundamental analysis too, and ultimately made me the trader I am today. Now, there's obviously a lot more to that story. That's 15 years of trading experience diluted into this 5-minute intro. But I started with technical analysis on baby pips. And I remember being on the baby pips website and learning, I think it was about moving averages. I learned about moving averages and the moving average crossover. Now, before this time, before I discovered baby pips and their school of Forex trading, or whatever it was called back then, I had never even really looked at a price chart. I didn't know what Japanese candlesticks were. I didn't know about indicators at all. So when I first discovered like a moving average crossover, I thought, whoa, I'm going to make it as a trader. All I have to do is look for that signal, buy or sell accordingly, and make money. And there was all these other indicators too. I thought if I just add, 3 or 4 indicators, I've got myself a really easy strategy that's going to make money. And I thought at the time that this was a big light bulb moment, learning about technical indicators. But I learned another hard lesson, and that was these technical indicators are not very reliable. You can't trade them as a signal to buy or sell, and I'll talk more about indicators later on in this podcast. So once I had learned that lesson, I went to real basics, the foundation of technical analysis, and that is price action. And that started me on a price action journey. And those that were following my YouTube content, my website content 10 years ago would know that I used to put a lot of emphasis on price action. And I still do. A lot of my trading strategies have a big element of price action. So I started to learn about price action, and there was a channel at the time called Exact Trading. It was run by a man named Paul Langham, and I loved the content. It was all about price action, trading what you see. So I started to learn about patterns, Japanese candlesticks, and from that I created my very first trading strategy, which was trading indices. So stock indices, CFDs, using the Owanda FX Trade platform. And it was a very simple strategy. I think it was based on 30-minute charts. My memory's not great, but 30-minute charts. And I would identify a trend, an uptrend, downtrend, wait for a retrace move, use moving averages, get into a trade in preparation for the next swing lower or higher. And it worked okay. It wasn't the greatest of strategies, but it did give me an edge, and I would trade European indices. It was the CAC, the DAX, and the FTSE. And that was really the foundation, or the start of creating a trading strategy based on technical analysis that gave me some results, that made me some money. And then things started to develop from there. So as my price action journey continued, I learned all about patterns. Patterns have always been a big part of the way I've traded. So trending patterns, how price behaves when it swings. Higher highs, higher lows, lower highs, lower lows. I love to see the moving averages cross and to catch a trend. The trend is your friend. And there is a great feeling in catching a trend. Actually trading the trend, the feelings you have, the journey of following a trend can be quite painful. But when the trade is closed and you see the trend that you've been able to catch, the feeling is euphoric. And I think that's the same with many things in life. The actual journey itself can be quite hard and at times discouraging, worrying. But when you look back and see how far you've come, you're filled with pride and happiness and excitement. And that's pretty much how I feel with trading the trend. So if you're following my current series on YouTube, Trading a Small Account, I have 2 positions open on Euro, Norwegian krone. And it is emotionally quite painful. As Euro news comes out, as economic news for Norway comes out, to see those swings and to be concerned about your floating P&L, there is an element of emotional pain. It's quite challenging to follow this trend. One of these positions has been open. If I bring up my account in front of me, one of these positions has been open since early May. So coming up to 2 months now. And it is quite hard. I got a Swiss franc position, Swiss franc yen position that I opened this morning. If price does start to downtrend, I could potentially be in that trade for days, weeks, even months. And it is hard. It is challenging to keep a position open. There is this emotional toll. But when you actually close the trade down and have successfully followed a trend and made a huge return, 1 to 10 risk reward, 1 to 15 risk reward, there's a great sense of pride and achievement. So trending patterns, I love them. I love to identify trends and follow the trends. I suggest that's how everyone should trade, is to find a trend. All strategies should be based on identifying trends as early as possible and trading those trends. Consolidation patterns is something else that I learned and applied over the years. I don't really use triangular consolidation patterns, but horizontal channels, ranges. I love those sideways consolidations and looking for a break. Those break or consolidations and also the trend patterns are really what I look for to decide in which direction to trade. I trade in the direction of the breakout, or I trade in the direction of the trend, especially these consolidation breakouts and trends that are on higher timeframes, the daily, the weekly, the monthly. They can provide a real sense of direction. Am I bullish or am I bearish? Reversal patterns. I love reversal patterns, mainly head and shoulder patterns, double tops, double bottoms, triple tops, triple bottoms. They've always been part of my trading strategies, and I have a very unique way of trading these patterns, which is covered in my Ultimate Forex Trading course. But I love these patterns. They provide a way for me to get into the market, and that's what technical analysis is for me. It's the reason why I enter a trade where I do and exit a trade where I do. So you'll learn in the next episode of this podcast that I do use fundamental analysis, and fundamental analysis really gives me the confidence to take a trade and gives me the confidence to hold on to a trade and provides a lot of direction to a trade and also what to trade. So to summarize that and make it a bit more clear, fundamental analysis provides what to trade and the why of taking that trade and how long to hold the trade. The technical analysis tells me when to get into the trade and where to get off and where to put my stop loss, where to put my take profit, following the trend, following those technical levels when you catch a trend. Technical analysis does that. So fundamental analysis and technical analysis together for me, provide this real great way of trading that ticks all the boxes. And I highly suggest you use both. Something else that I learned over the years was price action setups. Mainly, I use engulfing candles, pin bars, and inside bars. I love those setups, just like when I learned about moving average crossovers and other technical indicators. When I learned about price action setups, I thought, okay, there's an engulfing candle, time to buy, or there's a pin bar. Some people call them kangaroo tails or hammers, inverted hammers. There's the signal, let's sell. I soon learned another hard lesson that it's not as simple as that. So setups, patterns, all provide part of the strategy for me. And for a setup, when it comes to a price action setup, that's the last thing I look for. It's kind of the trigger before I take the trade. There's a lot of groundwork that is put into place, and then when I see that price action setup, okay, let's enter the trade. So it acts like a trigger for me. So that's my price action journey, and I have diluted it because I didn't want to talk for hours and hours, but I started from nothing. I knew nothing. I lost lots of money, decided to take this more seriously, went to baby pips, learned about technical indicators, quickly moved into price action, and then really learned as much as I could about price action and developed my first strategy based on price action, reviewing and trading price action. And today, even though I consider myself a much more professional trader, a highly experienced trader, a good independent Forex trader, these basic elements, how price trends, how price behaves when it trends, reversal patterns, Japanese candlesticks, these basic things do still play a big part in how I trade the markets. And to make it clear, it's not as simple as looking for a head and shoulder pattern with a pin bar. There's a lot more to successful trading than that. But those things definitely play a part in why I take the trades that I take, and play a big part in the success that I've seen and continue to see as a trader. Okay, so let me take some time to talk about technical indicators. Now, when I was learning price action, there was a lot of anti-indicator sentiment on the internet. Lots of people say, don't use indicators, they're rubbish, they're useless, they just focus on pure price action. 15 years later, I don't see that anti-indicator feel or opinion across online forums. Not that I go to online forums, but I do feel that people have accepted indicators now. They didn't 15 years ago, and I'm talking about the retail trading industry here. One of the big misconceptions with technical indicators is they're not signals to get into a trade. Just like how I mentioned price action setups are not a signal, they're just part of the strategy. It's the same with technical indicators. So technical indicators should complement your analysis, not be your analysis. There's a big difference there. So you don't take a trade because the moving averages have crossed. That's not going to make you money. That's not going to make you a successful trader. But analysing the market, believing there's a trend, and then seeing a moving average crossover should complement that analysis and give you more confidence that the trend you've identified is actually going to happen. So they complement your price action analysis, perhaps complement your fundamental analysis too. They're not a signal to enter and exit trades. Now there are thousands of technical indicators, maybe even tens of thousands of technical indicators. I personally stick to 2 indicators. That's moving averages and then an RSI. And going back to that whole complement, the technical indicators should complement your price action analysis or fundamental analysis. If I believe a market is overbought, I will use the RSI as a confirmation for that, or oversold. If I believe a trend is coming to an end or starting or momentum is dying, once again, I'll use the moving averages to confirm that. They're not the sole reason for my analysis. They are there to complement it. But I try to keep things very simple with technical indicators, and they do play a significant part of my analysis in the sense that I do rely on them and I use them on a daily basis. Now, if you have too many indicators, you'll find that the indicators distract from the price action, and you'll end up analyzing indicators rather than analyzing price. And I've said it so many times now, I'm getting bored of saying it myself, but they're there to complement. Don't start analyzing indicators. That's not the purpose of them. So try and keep it simple. With moving averages, I use the 50 SMA, the 100 SMA, and the 200 SMA. I use them for support and resistance. That's dynamic support and resistance. So many times you'll see that the daily chart, the weekly chart, the monthly chart reach one of those moving averages, the 50, 100 or 200, and reverse. They're great for support and resistance. I also use them for trend direction. If I think price uptrending and the moving averages cross and confirm that bullish bias, that just gives me extra confidence. And the same with downtrending. And as mentioned with RSI, I use the RSI on a daily basis just to confirm overbought and oversold markets. Now, the way I trade is simple. It's simple in the sense of I'm using price action patterns and indicators, but it's perhaps more complex than the impression you may receive listening to this podcast. There is fundamental analysis in place. There is risk and money management. There is the ability to hold on to positions and exercise self-control, not fall victim to trading psychology. There's a lot more to trading than technical indicators and price patterns, but these are fundamental steps. It's essential that you know these things. They are great tools, but they're just a couple of tools in the toolbox that will help you become a successful trader. Thank you for listening to another episode of this podcast. Any questions, please get in contact. If you have any suggestions for future podcast episodes, then drop me an email. Or if you're listening on YouTube, then put something in the comments section below. Thank you for listening, and I'll speak to you in another episode of the Forex Podcast.